The Disciplined Investor is all about you, your money, and the markets. Sit back and get ready for this edition of the Disciplined Investor Podcast.
This episode of The Disciplined Investor is sponsored by Horowitz & Company. If you're looking for a portfolio manager, look no further. Horowitz & Company. From seed through harvest, cultivating financial success.
You know, there used to be only two ways to meet for business, over the phone or in person. Now there's a better way. Use GoToMeeting to meet online. With GoToMeeting, everyone sees your computer desktop on their computer screen, so you get the best of both worlds. It's like meeting in person, but without wasting time and money traveling. And your conference calls will be more effective. The best part is that you can actually try it for free. That's right, GoToMeeting is free right now for 30 days. For this special offer, you must visit www.gotomeeting.com/podcasts. That's gotomeeting.com/podcasts for a free trial.
Hello and welcome. This is Andrew Horowitz, and this is the Disciplined Investor Podcast. Welcome aboard to episode number 119. Thanks for joining me today. We have a special guest. It's going to be Jim Rogers that's coming on board. You know him, the investment biker, worked with George Soros on the Quantum Fund, lives in Singapore, and I thought what we'd do today is spend a little time on the international markets, prepping you up for this discussion with Jim Rogers, and really getting into some of the detail of the Asian markets and the global environment right now. And then we could spend some time talking with him about what he thinks and what he sees for the future. Remember, he's a big commodities guy. He really enjoys the Asian markets, and I think prefers the Asian currencies over the dollar somewhat from what I've seen and what I've read of him. And I thought we would get into that as well. But what I thought we'd do right now is spend a little time talking about some of the Asian markets. And boy, have they been on fire. As a matter of fact, if you look at the China market, not the Hong Kong now, not the Hang Seng, but the China market, the Shenzhen, it's up 100% year to date. And there's two of those, one's an A and a B, but anywhere from 82 to 100% depending on which one of those you choose. We've seen the Straits Times, which is, of course, Singapore, of 41% for the year. And, I mean, when you look down this list, even the Hang Seng of 37%. We're looking at the stock exchange of Thailand, up 36%. Jakarta is up 59% year to date. Sri Lanka up 65%. And Ho Chi Minh City up only 37 cents. We're going to 37%. We'll cry for them. But, you know, of course, they've had a really rough time through 2007 and 2008. They were a little bit behind us, behind the U.S. when it came to the markets really, selling off dramatically. But what I also wanted to talk to you about, more important than just the returns, let's take a look at what's going on in terms of these countries, their GDP, their unemployment rate, etc. So I took a few things. Japan, first of all, the GDP is year over year down 8.8%. They have a total GDP of about $4.3 trillion, the biggest of all the Asian countries. Although recently, supposedly, China is going to start eclipsing them. The China market has a 7.9% year over year GDP growth, whereas India has a 5.8%. And again, in terms of size, you really start scaling down very dramatically when you get past Japan. China, 3.2 trillion. India, 1.1 trillion. When you get down to Thailand, you're at $245 billion. Singapore, it's 161 billion. Year over year, Singapore is down 3.7%, but they have a surplus. They have a surplus of exports, essentially, of 12% in Singapore as compared to their GDP. So it's the divisor, if you will. And, they have an unemployment rate of only 3.2%, where Japan only has 5.2%, China 4.3%, India 7.3%, and perhaps the biggest in the region is Indonesia with 8.1% overall unemployment. But I got some other statistics I thought were interesting. Let's compare that now to the United States. So the United States is the number one GDP in the world with $13 trillion GDP. Canada is only at $1.3 trillion only. The Eurozone is at $12 trillion. The entire Eurozone is at $12 trillion. And supposedly our GDP year over year is going to be about 2.5% in the negative. We have a deficit of 7.8%. The Eurozone is pretty much flat. UK is a negative 2.6, and again, just looking at that in relatively, when we look at the surplus to deficit, Japan is a negative 3.8. Again, we're at negative 7.8, and there's really no significant year-over-year growth. The worst country is probably Mexico right now when it comes to this region. But here's what's interesting, the jobless rate. Listen to this. We're at 9.5% in the United States. Canada's 8.6. Brazil is at 8.1. Eurozone's at 9.5 as well. But when you compare that to most, if not all, of the entire Asian continent, I mean, we're talking about 4s, 5s, 6s, maybe some 7s in there. Kind of a different animal, different situation going on in Asia, and maybe that's some of the reason why they're so easily able to really move out of this in such a dramatic fashion. They're not dragged down by this massive unemployment. They're a different type of place to be, place to work, and we'll see if that really holds out. And like I said, we're going to ask a lot of questions from the guru in this area, who's Jim Rogers, and we're going to get to him right in a second. I just want to mention to you that some people did ask me again and thank me. I got some emails, so I'm going to tell you once more. If you want to check out the Disciplined Investor Managed Growth Strategy, it's a virtual tour of kind of how we manage money. Audio, visual, 14 minutes. I take you through it. Go over to thedisciplinedinvestor.com. We'll put a link right in the website notes in there for you. It's on the right-hand side. It says this little blue kind of rectangular thing that says, a hedge fund without a hedge fund. Go check that out. Click it and spend some time there. I think you'll really enjoy it. And when we get back, we're going to be talking with Jim Rogers, and I think you'll enjoy that. I know I've been looking forward to this for some time. And by the way, just to let you know, he's in Singapore. This is a very late night for me on the podcast, so I hope you enjoy it. Stick around. We'll be right back on the Disciplined Investor Podcast. And we are back on the Disciplined Investor Podcast, and as I told you, we're with Jim Rogers, all the way in Singapore. Good morning, sir. How are you?
I'm fine. Delighted to be here.
Thanks. So I thought we'd start out. I told you that we had a discussion with my listeners a little bit about the global situation, the kind of unbalanced situation right now where we see not only China, but the entire Asian region, almost, as I see it, picking up the rest of the world. Is that how you see it?
Well, I would hardly say that Asia, or China especially, can pick up the rest of the world. The Chinese economy is 1/10 the size of the European and American economies combined, it is. So, even if they boom, it's going to take a lot more than that. India and China alone are tiny economically compared to the rest of the world. But things are better in Asia. Having said that, let me quickly say things are better in Asia than they are in the West. The largest creditor nations in the world are all in Asia now. China, Japan, Korea, Taiwan, Hong Kong, Singapore. I mean, the money's out here now, whether we like it or not.
Yeah, it is quite astonishing. And, now the talk of, changing this currency. I mean, is that a lot of this flap right now, or is that just something that really you think is going to occur?
The slack in the currency?
No, in other words, there's a discussion about having, changing the world reserve currency, and we've been hearing it from, the BRIC countries in particular. Is that something that's going to really happen?
Well, there's no question that the world has a problem with its reserve currency, i.e., the U.S. dollar. It is a terribly, terribly flawed currency to be using as the world's medium of exchange. The same thing happened to the pound sterling once upon a time, and it lost its status. I mean, the same thing has happened to every currency in history which the world has used at one time or another. Will it happen anytime soon? I don't think so, but the world is moving away, trying to figure out a way to move away from the dollar. Our enemies, America's enemies, are already stopping the use of the dollar. Iran, Venezuela, people like that. Many of our friends are starting to question the future of the U.S. dollar. So the U.S. dollar's days are numbered as a reserve currency, but having said the days are numbered, I don't expect any problem. I don't think that to happen, expect that to happen this year.
Right.
But it is happening over time, just as happened with the pound sterling.
Yeah, it's interesting because I think that there's a lot of concern about, number one, what the U.S. government is spending to try to prop up the whole banks and all that, but then also the relationship with many of the commodities. I mean, do you think that's a big issue and a concern, the relationship of the dollar to oil and to many of the commodities out there? Because that seems to be a big problem.
Well, given that most of these commodities trade in the U.S. dollar, that will cause transition problems if and when the world moves away from the dollar. But remember, 100 years ago, all these commodities traded in the pound sterling.
Right.
It doesn't anymore. And the world has somehow or another survived, and we've all moved forward. I'm sure there were people who went bankrupt during the transition. There were also people who made fortunes during the transition.
Yeah.
That will happen again this time.
So one of the things that I think that I understand is that you're living in Singapore out of choice. You like that, love that country, my understanding is. And,
Yes.
you could live anywhere in the world. That's your choice right now. It has a pretty, solid-looking foundation. I mean, we're talking about a 12.5% surplus to GDP on overall. It has a small economy, what, about 161 billion, low unemployment rate, which is great. CPI is low right now. GDP is going to get a little hurt here. But if my understanding is that in Asia, when you look out at that, and I think, maybe this is something you can help me with, South Korea, Singapore, maybe Taiwan, possibly Taiwan, maybe not so much, and Thailand to a degree, but not so much China is some of the things that you like. Is that correct?
Well, as I said before, the major creditor nations in the world are now in Asia. This is where the assets are. Throughout history, you have seen people move in the center of influence and power moving to where the money is. You have never heard any time in history where people said, you see all those debtors over there? Let's go over there.
Mm-hmm.
People have always said, you see, that's where the money is. Let's go where the money is. Singapore has, if you look over the past 50 years, Japan was the greatest success story of the last 50 years. Singapore was the greatest success story in the world of the past 40 years. China probably of the past 30 years. So lots of great things are happening in Asia. We picked Singapore for a variety of reasons. The many reasons go into where you wind up living, as you well know. I mean, we weren't transferred here or anything. We came here because we wanted to, mainly because we want my children to grow up speaking Chinese and understanding Asia. Asia is going to be extremely important in their lifetimes. These little girls were born in 2003 and in 2008, so I'm making an investment in their future, not so much in mine as in their future. This is where the money is, and this is where the action will be, like it or not.
I hear you. Listen, I've been over there a few times, and I think it's a fabulous area. But let me ask you about Japan. I'm stumped on Japan. Japan looks like an economy no different than maybe, England in a way, but yet they have the proximity to Asia, so that it helps them, I guess. But, when you look at the PE ratios, and you look at the earnings, and you look at the potential, and you look at the aging economy, you look at their exports, I mean, is Japan a viable economy any longer?
Well, Japan does have some serious problems. It may be comparable to England. Well, not comparable to England 100 years ago, but it certainly has serious problems. They've got a demographic problem, probably the worst in the world. For the first time in their recorded history, they have a declining population, and the birth rate is such that there won't be any Japanese in 100 years unless something happens. You combine that with staggering internal debt. I mean, perhaps the highest internal debt of any country in the world. And I just don't know what's going to happen 20 years from now in Japan. I own the currency at the moment. I own a few Japanese shares, but they do have the advantage that they're near Asia and that their largest trading partner is now Asia as a whole, and specifically China, plus the other Asian countries. So that's helping them. I mean, Canada became a very, very successful country because it had a rich neighbor and was at the right place.
Right.
Well, Japan's going to benefit to some extent from that, but overall, I mean, I can't imagine I'll have any money in Japan 5 or 10 years from now unless they do something about the staggering internal debt problem and the demographic problem. They're the second largest creditor nation in the world internationally, but domestically they just have unbelievable debt, even worse than the U.S., believe it or not.
Yeah, I haven't been able to bring myself to invest in Japan, I'll tell you, and I'm not, obviously they're beaten down, they have the good trading partners and all that, but everything I see across the board, it just doesn't look like a healthy place to put money.
Well, as I say, I've got some money in the currency and the reason, by the way, just so you know, is they passed a law recently giving incentives for people to bring money back into Japan. The Japanese to bring their money back into Japan. I don't know if it'll work or not, but America did that a few years ago, as you may remember, and there were huge amounts of money came back into the U.S. on a temporary basis anyway. So that's why I own the yen, and they are a huge creditor nation as well. So there are various reasons that I have it. But again, I want to emphasize, I'm not going to have money in Japan in a few years from now unless something dramatic changes.
Right. So looking back across the world on the other side here, what is your opinion generally of the United States? I mean, with our banking issues, which is obviously the worst in the world, with our government spending more than any other country to backstop all this. What is it looking like? Actually, two questions: the United States and then the whole Eurozone.
Well, the U.S. is the largest debtor nation now in the history of the world. It grieves me to say that, since I'm an American citizen and an American taxpayer, and I'm quite fond of the U.S. But we have to deal with facts, and the situation is getting worse. The federal government has probably quadrupled, quintupled, sextupled its debt here in just the last year or two alone. Nobody really knows because they took on such gigantic obligations. Now, this has never been a good thing for a country, especially to have this much debt this fast. So right now, things are looking a little better because they've pumped huge amounts of money into the U.S. economy and into the U.S. financial system. Well, that always helps for a while. But remember, the guys who get the money, problems down the road. Always has, anyway.
And I think we're doing all three right now, as a matter of fact. We're doing all three of those.
No, I know we are, and it scares me to death. What's equally terrifying is that the people who got us into this problem are the people that they're now saying, okay, you solved the problem. I mean, Geithner and Bernanke and Summers, these are the guys who caused the problem.
Yeah.
And yet somehow or another, Mr. Obama just obviously doesn't know what he's doing. The idea is you take the people who caused the problem and who didn't understand that they were causing a problem, and then say, now you fix it, is mind-boggling.
What's interesting is about Larry Summers. He seems to be the only one that talks at all, anything even remotely negative about the economy and the future. Everybody else is talking about a peachy green and a great story. Where Larry Summers, I don't know what the differential is there. Talking about very limited growth potential, very slow recovery, very really trying to keep down expectations. I find that really interesting.
Well, that's because he's a politician now. They all know that if you don't build expectations, then things come in better than you thought. Then people say, oh, gosh, things are okay.
Yeah.
Things are better. They're trying to manage expectations. This is an old political trick that's been going on that politicians learned long ago.
Yeah. So one of the things I heard you talk about was the dollar and the dollar sliding and the potential for, I think you were talking a little bit tongue-in-cheek here, but the Dow to go to 40,000, and then, of course, Dow is not worth anything because the dollar is not worth anything. Do you believe that the dollar is, I mean, I've talked to a lot of people, the dollar is going to be just obliterated long-term?
Well, you look back at history. Again, this is not any kind of political statement. Just look at what's happened throughout history. Whenever a country's gotten itself into this kind of situation, it's always caused huge problems in the currency. I mean, the pound sterling went down over 90% from its top to bottom. I mean, that's over a long period of time, but still, it's down a great deal. It's happened to the Spanish peseta, which was a great currency once for the world. The Dutch guilder, all these currencies have lost huge amounts of their worth, and that's going to happen with the U.S. dollar as well. Now, if that happens, of course, the prices of everything will go through the roof. Why can't the Dow Jones go to 40,000? I mean, I'm not suggesting it's going to happen anytime soon. Right. It wasn't tongue-in-cheek so much, just saying, guys, if and when this does happen, the prices of all stocks will go through the roof, but it will be in worthless currency.
Yeah, we saw that with Zimbabwe. Let me finish up with this discussion. I know you have. I think recently you talked about natural gas being possibly a good play, but in terms of commodities, because this is something that you really know about. What are we looking like on the side of commodities? I mean, is oil potentially going back up to some ridiculous number? And I have my reservations about that, but, okay, this cap and trade issue, I don't even know where they come up with this ridiculous notion that they can, really put the screws to companies like they're going to do with this. But nonetheless, all the commodities out there, where's the real play here?
Well, if I knew the answer to that, I'd be rich. We all would be rich. I wish it was that simple. As far as I'm concerned, all commodities are the place to be. I mean, the fundamentals of most of the world economy are not getting better, as we've discussed already, but the fundamentals for commodities are improving. Many farmers cannot get loans for fertilizer right now. Nobody can get a loan to open a mine. So you have a supply of nearly all commodities continuing to decline at a time when governments around the world are printing huge amounts of money. So whether the economy gets better or not, I'd rather be in commodities than anything else. Which ones are best? I have no idea. I'm the world's worst market timer. I own them all. And
right.
I bought more agricultural recently. I'm keen on agriculture because the inventories are so unbelievably low and the prices are so low on a historic basis. Natural gas, I'd rather own than oil, but I own them both. just because natural gas is down so much on a historic basis. The world's known reserves of oil are declining. There may be huge amounts of oil out there somewhere, but we don't know where it is. If it's there, and if you know, you should tell us so we can invest in it too. But there's no question that at present rates of consumption, the world won't have any oil in 25 years, say. Any oil at any price, unless something happens very quickly. So I'd rather be in commodities than anything.
Right, and even with, I mean, you talk about the agricultures. I mean, wheat we've seen a ridiculous supply of lately, but you're saying still, comparatively, it's not that bad off most of these commodities, and the prices are good. What about, I mean, these we're seeing conversations with these potash. Is that in that whole genre as well?
Well, with potash, yes, that's certainly a commodity. There's no futures market or anything. It's used for fertilizer. Right. And if the price of agricultural products goes higher, then obviously somebody's going to make a lot of money with fertilizer if the farmers can afford it. The problem is they can't afford it now. There might be a transition. I'm not really current on potash, so I don't know. You say that there's a lot of supply of agricultural reasons. Well, maybe in the U.S., but not in the world. I mean, the inventories of agricultural products are the lowest they've been in decades. So you may have some oversupply here and some oversupply there. But worldwide, and that's ultimately what determines the price of anything, the supplies are dangerously low, and if we start having weather problems, prices can just go to unbelievable levels.
So let me close with this. I know you've written a lot of different books, but the latest book that you wrote was much different than the other ones that you've written, I believe. It was a book, the title was For My Children, I think it was. Tell me,
Gift to My Children.
Gift to My Children. Tell me a little bit about that.
Well, I've had a few failures in my life and a few successes in my life, so I thought, well, I got 2 little children. I came to parenthood late. I didn't have a child until I was 60 years old. I was always very skeptical. In fact, I was anti-children.
Evil.
I used to feel sorry for people. I felt sorry for people that had children.
I understand.
First of all, I want you to know I was totally, unbelievably wrong about it.
Right, yeah. Admit this, right? Once you had the kid, your entire life changed in a blink of an eye, didn't it?
It did, but people used to say that. I said, you poor sap. I thought they had changed it for the worse.
Right.
I didn't know they had changed it for the better, for goodness sake.
Yeah, I'm with you.
So, no, it certainly changed everything completely, and it's been a joy every day for the past 6 years. And so I figured I better start writing some of these things down for my children because I learned a lot, and I wanted them to understand a lot about, as I say, from my experience, my failures, my successes, to help them. And the next thing you know, I had a book.
Wow.
And I'm sure I'll continue to expand the book as well. Just a short little thing. You can read it in no time. As I say, it's some of my failures, some of my successes and excesses. And I wish people had told me some of these things long ago.
Yeah, well, and then eventually you're going to have the next set of beautiful grandchildren. You can write a book like For My Grandchildren. A gift to my grandchildren.
I hope it goes to all of them. I mean, the book is written, hopefully, so that they can give it to their grandchildren and their grandchildren. The lessons in this book are eternal. At least I suspect they are. Most of them are.
Well, we'll put a link on that. Jim Rogers, I really appreciate you taking some time this morning / this evening to spend time with us here on the Disciplined Investor Podcast. I encourage all my listeners to check out your books and to spend some time getting to know you more. I really thank you for all that you've done over the years to help people understand more about investments and the economies, commodities, and everything that you do. It's really very much appreciated by all of us around here.